Hello, I'm Claire from Facey Industrial Commercial and welcome to the first segment in the Face-to-Face series. Today's topic is about what's driving our market. Directly to my right, with over 25 years experience, is Mark Bond. Hi Mark.
Hi Claire.
Next along from Mark, it's Chad Kendall. Hi Chad.
Morning Claire.
And on the end, it's Matt O'Dea.
Hey Claire.
Now, firstly, the basics. We hear people refer to the market a lot in this industry, but what does that actually mean and why is that relevant? Mark, could you give us a brief outline on why people should be considering the market?
Well, the market to us is industrial commercial property. So we focus on the southeast, and industrial commercial is office, it's retail, it's industrial, it's showroom, it's the land that facilitates all of that. And it can also get into englobo sales because that'll always include some commercial.
Matt, have you noticed an impact on our market due to the current low interest rate environment?
Yeah, there's no doubt, Claire. There's a substantial driver behind investment sales at the moment. They're very tightly held in the market. A lot of people are resistant to let them go because they're very hard to replace. That means for us as agents, we've got to work pretty hard to unravel investments. That's a challenge for the industry at the moment because transactions have to keep flowing through, but there's no doubt, the Facey team is working very hard for our clients to find those sort of products to sell.
Our key roles as commercial and industrial agents, we manage a number of properties, and that's a key role that Chad plays in retaining those tenants.
Traditionally, commercial investments were achieving 6 to 7% return, and even because of this supply and demand, there's evidence of sub 6%.
Yeah, and in the industrial sector as well, which hasn't been seen really since my time at Facey. So we're in an era I haven't been a part of until now, and it's exciting times, but you've got to really hone down and find the right sort of stock to get your hands on, and there's a fair bit of strategy behind it now.
Yeah, and you've got to also keep in mind some of the commercial properties are trading at sub 5%. There was a bank recently sold in Berwick at under 4%. So you've really got to keep in mind your property categories when you're out there looking at investments.
Our bread and butter's generally been that corridor through from sort of Keysborough, Dandenong, Hallam, Narre, Berwick, Pakenham and parts of Gippsland. Now we're starting to do a fair bit of business from the sort of Scoresby corridor down East Link to Carrum Downs and a bit beyond that. We always do step a bit outside that area, but that's our focus. It's a fairly large geographical area, and we're glad we've got a team of 10 or so that can cover it. Because there's a hell of a lot of buildings in that pocket, and it's been a great and exciting place to work.
And we're pretty well located here in the heart of Dandenong, so we're right in the middle of that area that Matt's talking about.
And you're also getting the maturing of the commercial areas. Officer is a focus now. Pakenham is being regenerated. It's not a country town anymore. It's a place where people choose to do business.
So Cardinia Shire, you'd say that's where investors should be looking?
Well, as Matt's discussed, it's all about value. And if you can get in at the right time, at the right value, you're going to be able to see that capital growth. That can be a little bit tricky in the commercial industrial market. You need to get your timing right. But we certainly see Cardinia as just fantastic value. Cranbourne's a great example. If you'd got into Cranbourne 5-10 years ago, you'd really be reaping the benefits.
Great. So obviously Dandenong has gone through a massive change over the last decade, and infrastructure has played its part in that. But how has that affected the property market?
Well, it's had a huge impact. In short, I think if you look at the infrastructure of Eastlink, that probably started the journey maybe 12-15 years ago. Now with Peninsula Link, the Dandenong bypass, that's really livened up the industrial market. And then the revitalisation, which would be about a decade or so old here in the CBD, it's made Dandenong a place to do business.
Yeah, we've really started to see that shift from the sort of inner eastern type businesses, coming that further step out with just the efficiencies they're getting with their businesses due to the transport factors, due to the fact the workforce, a lot of them are living out this way as well. It's a bit of a no-brainer for some of these companies to get that right, and we've been the beneficiaries of it really in this Dandenong area.
With the GSO, the ATO tax office new building, and the council offices, 3 major construction events in that decade have again brought the focus back to Dandenong as a place to work.
Key driver in getting good staff is having facilities close to where they live.
I think we're all much more informed now. If you have any questions about anything that we discussed here today, please give us a call here at the office. Thank you very much to Matt O'Dea, Chad Kendall and Mark Bond. My name's Claire. Thanks for watching.
Thanks, Claire.
Bye.